Philip Hammond is being urged to freeze rises in commercial property tax bills after business rate bills began hitting doormats across England last week. New figures from real estate advisor Altus Group reveal that over 242,000 firms face rises of more than 3% in the business rates from April, with nearly 52,500 suffering increases of more than 20%. It comes despite Mr Hammonds' pledge in the November budget to bring forward the switch in the inflation measure used to calculate annual increases from 2020 to this April. This meant that business rates would increase annually in line with September's lower consumer price index CPI of 3%, but due to phasing in of the recent revaluation changes which saw crippling rate hikes for thousands of firms, many firms will see rises far greater than inflation. Historically, the spring is when chancellors have made key fiscal decisions, so it's not too late for a freeze in inflationary rises. Alex Probyn, president of Altus Group, said it was not too late for Mr Hammond to freeze further rises in rates. In his spring statement, he said the past few months have seen a stream of collapses across both the retail and hospitality sectors, with many others teetering on the brink of considering large-scale closures. Historically, the spring is when chancellors have made key fiscal decisions, so it's not too late for a freeze in inflationary rises to help cushion the blow for those in transition amidst challenging trading conditions. Analysis of government data by Altus found that 119,665 small premises, 110,502 medium-sized premises and 12,107 large premises will all see tax rises greater than last September's 3% CPI rate, totaling business rate rises of £712.75 million. The phased-in transitional relief also means 52,483 properties will see rises in the rates bills of over 20%, while 9,235 will see rises of more than 30%. Thursday, November 23, 2017. Business rate hikes have been blamed for adding pressure to firms in the retail and leisure sector in particular, with celebrity chef Jamie Oliver the latest to fall foul. His restaurant chains have been hit by huge bill rises, forcing him to close one of his London barbacoa eateries and buy out the other in a rescue deal. Recent figures showed the government is set to cash in to the tune of £25 billion as it reaps the rewards of last year's controversial business rates revaluation. The amount of money raked in from businesses by local authorities in England is set to rise by £845 million to £24.8 billion for 201,819. The business rates overhaul on April 1 saw 1.9 million properties in England revalued and left many businesses facing eye-watering increases. Independent forecast of the Office for Budget Responsibility revealed that £4.5 billion has been set aside to cover tax rebates across England over the next 5 years. But appeals under the new challenge appeal system reached 12,840. in the first 9 months, compared with 169,300 during the first full year of the previous regime, according to data earlier this month from the Valuation Tribunal Service.